Folks, it's Doc's Market Minute for Tuesday, December 15th. I'm looking at the S&P 500 monthly, weekly, and daily charts. And tomorrow, I believe we're going to get some type of resolution between this major conflict that we're seeing. First of all, we're seeing a major lower high setting up here on the larger time frame charts. Big lower high, which is threatening to come all the way back down to here and set up a head and shoulders pattern. I believe it's still too soon. This is too short a time frame for a true right shoulder on here. So I believe that the path of least resistance is going to be at least some more range bound. Now we could see the price actually rally from here and take out the highs, which is supported by this death cross that was crossed in late August with a 50 and the 200-day moving average. If you go over the last 20 years, every time a death cross that has shown up and is followed by a golden cross back up to the upside after that correction has led to some pretty serious gains going forward. So is this going to be the one signal that we see? And chances are pretty good that this is going to cross to the upside here. So is this going to be the one signal that we see which violates that pattern? So you can see this major tug-of-war that we have going on here. Even the weekly chart right now is in a primary downtrend. So we've gone from an uptrend to a series of lower highs and lower lows, and that's a change of polarity at the weekly chart, and that's starting to pull down this monthly candlestick here. So you can see how the stakes are so huge, representing what's going on tomorrow. Now we know the Fed has got a very high probability of hiking, but it's what they say around that is going to really drive what happens in markets. If they come out with a dovish statement from there, we should see a rally due to certainty coming back into the market. But honestly, when you look at the overhead obstacles that we have here, even coming up to 2100 is not enough to change the polarity on the daily chart. So it's got a lot of work cut out for it. So the most likely outcome is, even if we do rally, we're going to roll over and remain in this pattern for probably some time until we get this weekly chart charged back up again, so that we can see this, what looks to be a 500-point move, which is presently in the cards on the S&P. We'll see which direction that it wants to go. And the beginning of that journey, I believe, starts tomorrow. That's it for today's Market Minute. Thanks for listening, folks. We'll see you tomorrow.